Let's start by sharing why we decided to buy TSM. Of course, we've done very in-depth fundamental analysis, and we believe this company is worth accumulating for the mid to long term. Now, why did we choose to buy at this point? Actually, it's because we saw that during this recent pullback, it did not break below the trend's low point. Then a doji candlestick appeared, and within just a night or two, it broke back above the 25-day, 10-day, and 5 or 7-day moving averages and stabilized at this level. This is actually a right side confirmation buy signal. So around October 23rd, we bought in at these levels and have held until now. For this particular position, we have made about a 10% profit, which is pretty good, especially considering it has only been about 2 weeks. Even though it's a 10% gain, we're not going to sell so soon. We're still looking at this as a long-term investment. So for now, we're actually planning to add to our position. As for the price level we're waiting for, we'll be watching for the $309 mark. At this level, there's already been a major breakout with high trading volume. Of course, if you want to chase on this day, that's possible too, but that would be more of a very short-term day trade. For a better entry point, I would wait for it to pull back to around the $308 level before making a move. This would also be where I'd set my risk level, set my stop loss. The idea is to aim for an even longer upward trend. As for this stock, I'll be paying special attention to it because it has solid fundamentals. That's why. You can keep an eye on it and consider entering when it pulls back to this level. The main reason we're looking to buy Nvidia is because fundamentally it's a lot cheaper compared to AVGO. AVGO is trading at a PE ratio of over 70, but in terms of market dominance, Nvidia is even stronger than AVGO. Plus, recently Nvidia has successfully acquired the original R&D team behind the TPU. So what does this mean for its future? As for the monopoly position in both GPUs and TPUs, there's a good chance it can be maintained for quite a long time. So taking advantage of this pullback, and especially when it broke out at around $179, we went ahead and bought in ourselves, okay? Right now, from buying at the breakout here, we've got about a 5% return, okay? And from our earlier accumulation, we actually have about a 10% return, okay? So does NVIDIA still have room to go higher? So we think there's still a chance, yes, because we're watching their pullback level at $186. Actually, it already pulled back to this level once before. So hopefully, well, it'll pull back here again. This is a key support level because here you have the 10-day moving average platform plus the 5 and 7-day moving averages. So it's triple support. So for the remaining position, I might consider setting up or deploying at this level. Okay, finally, let me share a bit about Intel. As for Intel, I haven't bought in, but this company does have a viewer asked me about this, so I replied to them. At the time, I said that Intel did have some speculative potential because it had broken through the bottom of the trend and also pulled back slightly to the 10-day moving average. So at that price, it was actually worth paying attention to. Why don't we take a look at a video I previously shared with our viewers on YouTube? If you're already holding the stock, I would continue to hold it. If it bounces off the 10-day moving average, you can look for a target of $37, which still gives about 4% upside. Yes, that's how I see it. You need to set a stop loss. So as you can see, when Intel was close to touching the 10-day moving average, it rebounded strongly and directly hit my first target price and even reached the second target at 39.3. At this level, it's clearly facing resistance. You can see that this is a heavy trading zone, also known as a trapped long area. After it rose and broke through, it pulled back again. So what's next? If you want to play a breakout, you can consider the next level, which is at 6.1. Okay, 6.1%, meaning there is a 2.4% range. You can also set your stop loss accordingly. Okay, maybe set it at 1 or 2%. That could work too. But the odds of winning with this breakout might be a bit lower. Of course, I prefer to choose setups with higher odds, like pulling back to the first level, maybe the 25-day moving average or this platform level. The odds of winning might be higher and it would feel more comfortable. So you can consider these two options as well. Okay, so here's precisely what truly happened. Recently, on the festive occasion of Christmas, specifically on December 24th, the esteemed Jensen Huang reportedly spent a staggering $20 billion to successfully acquire the highly advanced TPU. Okay, if you genuinely do not know what TPU is, in the recent past, the specialized chip that NVIDIA had the most significant and dominant monopoly over was indeed the powerful GPU. So what about the future? And the prevailing trend for the foreseeable future is that the specialized chips we will increasingly need are indeed TPUs because, well, GPUs are primarily and predominantly used for AI training. But in the long run, when this intensive training process starts to reach a point of saturation, what comes next is actually as we have clearly seen with Google and numerous other leading companies, they are actively making highly specialized chips, which are truly and specifically designed for inference. Okay, so the future market, the entire future of AI, as for the chip market, according to some research reports, the main chips that will be needed are inference chips. So for NVIDIA, there's actually a crisis emerging. Their market share, which is currently dominant, is projected to drop to 40% by 2030 within the overall chip market. Okay, even though they have a monopoly now, that monopoly is only in training. When it comes to inference chips, they don't have a monopoly. Okay, so quite recently, Google released its new TPU and even opened it up to other companies. And this development actually poses a significant threat to NVIDIA. After seeing this, NVIDIA made a major move recently. They acquired a company called Grop, which specializes in inference chips. They didn't acquire the whole company, but rather hired its people. So NVIDIA's monopoly going forward, their significant dominance will very likely continue, primarily because with their advanced inference chips, they can effectively maintain a strong long-term monopoly. So as for this particular company, Grop, you can clearly see that their inference capabilities are actually the strongest in the market, especially when compared to other major players like Microsoft. And so on, the throughput here is the strongest. So this is actually very good news for NVIDIA. Not many people are talking about this, so everyone should pay attention. I think NVIDIA is good for long-term holding. We bought in before when it broke through around $170, and even here you should still buy in. Now it just keeps going up. Actually, there's not much to do right now. The current support level is at 186. If the stock price pulls back to 186, there are three layers of support. That's the platform level, the 5-day and 7-day moving averages, and also the support from the 10-day moving average. So short-term investors can pay attention to this range. These pullback levels are good entry points. If you're looking at it from a yearly perspective, then there's nothing to worry about. A yearly return of 30 to 40% shouldn't be a problem as long as AI development stays on track and the stock valuation isn't considered too expensive. For AI, it's not really overpriced. Plus, there's been a strong catalyst recently, so I'll be watching the recent support level at $186. All right, moving on. Finally, let's take a look at Tesla. As we mentioned to everyone last time, there was a wave of correction, and we felt that there would be an opportunity to make some moves coming up. We also shared a few price levels that are worth paying attention to. Recently, one of our target prices, which is at $460, has been breached. Since it's been breached and there are still no clear signals, we haven't started taking any action on the actual stock yet. We'll wait and see because it hasn't bottomed out yet. So what price levels will we be watching? Right, we'll be looking at NVIDIA. There's a chance it might test the $428 to $430 range. These are the levels we're watching. Of course, at the current price, it's not particularly expensive either. It's already dropped about 10% from its high. I think a more attractive entry would be around $425 because at the moment, actually, there will be support here because as you can see, this is a high volume trading area. So it's possible that the price will hold at these levels. Of course, you can split your position into more entries because in the worst case scenario, it might drop back to around 426. Also, you can see here, yes, it's already dipped a bit. And right here, if you look at the 4-hour chart, this is also a support level. So it's possible that it could bounce down from this level. On the 4-hour chart, historically, it has always bounced at these two levels. So this is also one of them. If you're trading on the right side, actually, this is a good spot to scale in. Of course, ideally, if it comes down to these levels, they are even stronger support areas. So for Tesla, we can pay attention to the current price, or these two levels both have potential. So everyone, keep an eye on that. So what should we do then? I mean, I don't think it's possible for you to catch the absolute bottom. So what's our approach? We use a method of scaling in. Okay, so you set your target position size and then scale in gradually. Okay, that's the method I would use, just sharing it with everyone. Okay, so recently we haven't bought the underlying stock yet, but in terms of options, we've already started opening some cash flow positions. The price I set is at $390. Then we buy in at that point. Okay, why did I choose the price of $390? Because $389 is roughly around this level, and this level is actually the 138-day moving average. Then there's also support at the 161-day moving average. Okay, but I think in the short term, it's a bit hard to reach that level. If it does reach it, I'll buy in. That's right. If it hits that level, I'll buy. Since we reduced our position before, if we buy back in, we'll still do it in batches at these levels. Yes. I think this price is definitely worth buying in at. Okay. Plus, with the premium received, which is about 700 US dollars, and I'm doing it for around 30 days. So here it's about $380 to $390. If I really manage to get in, it'll be around $382 or so. Okay, so it's roughly around these levels. I think it's a good deal. Okay, Tesla at $382. Elon Musk bought in at about $307. So $377 is considered a heavy position, right? That's why I think this price level is worth paying attention to. Okay, so that's the end of today's sharing. I hope today's content has been helpful to everyone.
If you like this video, like and subscribe. Join our investment community on WhatsApp, which is free for now, through either this QR code or we also link it in the description box down below. Feel free to comment if there is any topic that you want to hear about, any particular technical analysis that you want us to walk through. See you in our next video.